Alright, good day guys. Welcome to this video. This is 1stusFx, and in this video we're going to be talking about liquidity, the concept of liquidity. Now, everything we're going to be teaching, everything you're going to be learning about the forex market is going to be, the backbone is going to be resting on what liquidity is. So when you hear liquidity, what comes to your mind? What really comes to your mind? Alright, so in basic trading terms, liquidity just simply means where people keep their stop losses and their take profits. Now, this is important. Why? Because you understand that in the forex market, we have buyers and sellers. Everybody's not buying and everybody's not selling. There must be people who are buying and there must be people who are selling. So take for example, if the market is in an uptrend, you will usually see some retracement. This is people who are selling. Then when it goes up, people buying, and it comes down, people selling, and it goes up, people buying. All right, so there are always buys and sells in the market. So depending on the trend, if more people are buying, the whole market structure will be printing uptrend. If more people are selling, the whole market structure will be printing down trend. Now, how does this relate to liquidity? All right, so someone will say something. It says it's either you are the liquidity of the market or other persons are the liquidity in which you cash out. So basically what they are saying is this: whenever you place a buy, someone is always placing a sell. Or let's put it in a practical real life scenario so you understand. When you go to the market and you want to buy something, it means there must be someone who is willing to sell to you. You cannot buy from a buyer, you have to buy from a seller. And also, you cannot sell to a seller, you have to sell to a buyer. So every time you place a buy trade, you're actually buying from a seller, and that seller is your liquidity provider, usually through your broker. All right, now when you sell, it's also the same scenario. When you place a sell trade, you're actually selling to a buyer, which is also your liquidity provider through your broker. All right, so now, because the only way you can make profit from the market is when other persons make losses. Take note, everybody does not make profit in forex, everybody does not make profit in trading. There are always people who make losses. So when you see someone makes a profit of $10,000, somebody somewhere around the world actually made a loss of $10,000, because the money you are printing out from the forex market is not coming out of thin air. It's actually people depositing their money into their trading accounts to trade. I hope you understand. Every time you make a loss, that money is going to someone that made a profit. I hope you got that. Now, you want to learn this skill so you can understand, so you can make sure you are on the right side of the market. So liquidity is just simply where people keep their stop losses and their take profits. And your guess is as good as mine. Where do people normally keep their stop losses and take profit? People keep their stop loss and take profit above highs and lows. So this is why the highs and lows of candlesticks are very, very important. So look at this example again. The market makes a high and then prints a what? A low. If the market begins to go higher, you will already know price is going to take out these highs. So this is where everybody that sold kept their stop loss below this. So when price goes above it, what happens? The sellers make a loss and the buyers make what? Profit. It comes down again, buyers come in, they make profit, the sellers make a what? A loss. So liquidity is always above what? Highs. So in an uptrend, the liquidities are at what? At highs. And in a downtrend, the liquidity is at what? At lows. I hope you got that. So we understand the concept of what liquidity is all about. So whenever you hear me, for example, talk about liquidity, say liquidity is here, what I'm basically saying is that people keep their stop losses around those areas. Now let's talk about liquidity sweep. All right, liquidity sweep and liquidity pools. All right, so usually, which happens a lot of times, when the market wants to change its trend from an uptrend to a downtrend, you usually see a liquidity sweep. A liquidity what? Sweep. Whenever the market wants to change its trend, you usually see a liquidity sweep. So how does it look like? How does it look like? So it looks like this. So the market is printing higher highs and higher lows, and showing us the market is in what, uptrend. And then the market wants to what, change its direction. The first thing you see is that these highs will be taken out. So you usually see the highs taken out and then a change like this. So that is what we call a liquidity sweep. So price sweeps out that levels and instantly reverses. So you can see the reversal by this change of what, character here. So this is what we call a liquidity what, sweep. Now, usually when you see a liquidity sweep, I get it. It means that price wants to what, change its what, trend. Now the opposite of a liquidity sweep is what we call, not really an opposite, but also price looking for liquidity, is what we call liquidity pools. And liquidity pools are usually around areas of equal highs and equal lows, or strong support or strong resistance areas. So price just quickly sweeps out those areas and then continues it in its original direction. I'm going to give you real market examples, so just be patient. So an example you would see is something like this. So the market is printing higher highs and higher lows, and then the market goes high, and then we see these lows being formed. So you can see this is equal lows. So what the market does is that it goes below it. This is what we call a liquidity what, pool, and then the market continues in its original what, direction. So this sweep you see here is what we call a what, liquidity pool, because this is a strong support area. So price swept it out and then continued this original what, direction. I hope you understand the differences now between a liquidity sweep and a liquidity pool. All right, so let's look at a real market scenarios. So this is a very practical example of a liquidity pool. So we can see these equal highs the market formed here. Can you see? You can see the whole structure as being a downtrend. This is where the market is coming from those highs to these lows, and then we had this brief consolidation. So we had these equal highs here. The market broke structure, telling us that the market wants to sell here, but we see a displacement or a manipulation. So price goes higher to what, pull out liquidity, because for price to continue to sell, there must be people who are willing to what, to buy. Remember I said that at the beginning of this video. So price comes to these levels to sweep it out, and then what do you see? Market continues. Can you see that? The market continues to what, to sell. I hope this is very understandable. A very good example is I think I shared this the other day. 15 minutes time frame. Let me see if I have it here. Okay, so yes, yeah. So I caught this on the 15 minutes time frame and I shared it the other day. So you notice that the market has been in a downtrend. All right, and I noticed the market was consolidating here. So you can see this consolidation happening here. Can you see the consolidation happening here? So all I did was I took note of the equal highs here, and that is why I use as my entry. I shared it on the academy group, and the price just tapped it in and what, sold off and sold off. So this is the concept I use, that when you have equal highs and equal lows, price is always attracted to those areas to take out liquidity and then continue in its original what, direction. So I've showed you what a liquidity what, pool is. Now let's talk about liquidity sweep, where we usually see reversals. All right, so let me take this back to our time frame. So usually this is an example of a liquidity sweep. So you can see the market has been an uptrend here. You can clearly see where the market is coming from. Came from these lows, created these highs, created these lows, created these highs. So the market has been in an uptrend. And then we see how when the market creates this new, so from these highs we have these lows and we have these new highs. I hope you can see that. Now the market creates these highs. Let me mark it out so you can see it. So this is what we call a liquidity sweep. So I want you to take note of the candle that made the sweep. So sometimes the candle that created the sweep would have a body close out, and sometimes it may be a wick. I'm going to show you an example of a wick. All right. But what you want to take note of is after this sweep, there is always a change of character, as you see here. Can you see it? This is where the change of character happens here. And what confirms to us that a break of what structure? I hope you can see this. So if you've not watched the video on break of structure and change of character, please go back and watch that video. So this is what we call an example of a liquidity what sweep. So usually when you have a liquidity sweep, there will always be an instant change of the trend. All right, there will always be an instant change of what of the trend. So this whole price action of price, this whole displacement you see here was manipulation to get in more buyers. So some persons will see this as a signal to buy and they keep buying and keep buying, and then the market keeps selling and then they start making losses. So let's look at another example where we have a wick. All right, so this is another example where we have a wick. So here you notice we had this lows right here. So you can see how low, lower high, lower low, and then we had this change of character. Can you see this change of character here? Change of character, right? We had this, and then what was price? The price comes to sweep out these lows. So how do we know this is a sweep? We can see how the market what rejects from it. So we have a wick, and then we instantly see a change. We instantly see what? A change, and the price goes high as this to these levels. That in the so you can see here we have these equal highs created here. That someday price is going to come out back to. All right, so just take note of that. So you can clearly see how the whole market structure is formed based on liquidity. So usually a liquidity sweep changes the whole structure of the market from an uptrend to a downtrend and vice versa. And usually when you see a sweep, there will always be an instant change in the market direction. You always see that. So guys, I hope this I don't want this video to be too long, so I'm trying to keep it a little bit below 20 minutes. All right, so this is just the whole basic concept of what liquidity. All right, basic concept of what of liquidity. So remember, this backbone is resting on your foundation on market structure. So when you understand where's price coming from, where's price going to, you already understand how price is going to move out. So take for example this current market structure on gold. Take for example, if you notice, I am currently placing a sell trade on gold right here. And why am I doing that? Because this is, remember I told you highs and lows are where we have liquidity. So this is a significant high, it's a daily high. You notice price swept above it and closed below it. You can see all the candles closed below that high, showing you that price wants to what? To sell. And then we have this whole bullish candles that created fair value gaps. I'm going to talk about fair value gaps in another video. So price needs to rebalance itself back to these levels. All right, and then we can see more bullish trends. All right, so using the basic concept of what liquidity is, you can tell where price is going to react from, so it can help you ascertain a perfect entry. A perfect what? Entry. Sometimes your entries are not going to have any drawdowns at all. All right, I think I gave an example on of volatility 10 index in the synthetics market. I don't think I have it here though. Do I have it here? No, I don't think I have it here. Let me add it so we can see it. Let me add it here so we can see it. Sorry guys. All right, so this is it. All right, I've added it to the charts. All right, so I dropped a trade on this in our academy group the other time on these buys. So I noticed that we had this equal lows right here. So this is an area of liquidity. I was expecting the market to buy. So this is our lows. So obviously the trend has been an uptrend. I was expecting the market to sweep these lows, and then buy. And that is exactly what it did. And what I used is, if I go down to a smaller time frame, there's a small order block right here. Let me take it down to 5 minutes so you could see it. All right, so we're going to talk about order blocks. So this is the order block we have here. And that is how we caught this trade. It was a sniper entry. Those who are on the academic group caught this trade. So because of spread, this is a 1:12 trade. Very powerful trade. All right, I'm currently selling on volatility 10 index, and I use the same concept. I took note of these highs, price swept it out. All right, if I go down to a much higher time frame, like the 1 hour time frame, you would notice that when price swept those highs out, there was an instant reaction. Can you see the instant reaction? Telling you that the market wants to sell. So when the market opened today, I just instantly sold. So I sold from these levels right here. Sold from this fair value gap we have here. All right, so we're going to put all this together in a subsequent video. But I'm just giving you practical examples of how price action rates, how price action moves. So personally, I'm holding this trade for long because I'm expecting price to dip as far as these lows here. All right, so I'm expecting price to dip as far as that. But basically, this is the concept I used. So you want to ensure that you understand what liquidity is all about, so you can help you set good targets and take profit. So make sure you like, this video, subscribe, ask your questions in the comment section, and I'll see you in the next video. Once again, this is 1stusFx.